You are listening to chartingwealth.com for Tuesday, the 6th of February, 2018. Wow is all I can say. Markets down hard. When we look at the S&P 500, what do we see? We see the biggest drop I have seen in quite a while. What have we been telling you for the last few weeks? While everybody else has been talking about exuberance, markets going up forever, we've continued to warn you that they won't go up forever. We've continued to look and see. We told you this last week about the spinning top tending down. Lots of indecision as the week bled out. And then what did we see on Monday? A huge, incredible drop in the S&P 500, 4.12%. Now remember, we're using Heiken Ashi candlesticks. I had somebody that was probably a new listener confused at what we were saying regarding closing prices and where things were moving. Heiken Ashi candlesticks are measured differently than your typical high, low, open, close. You want to know more about them? Please go to the training that we have at chartingwealth.com under the training section, Heiken Ashi candlesticks. Heiken Ashi in Japanese means average pace. And we find them to be extremely accurate and helpful with us in finding the average pace of the market, the way that they are calculated. When we couple the Heiken Ashi candlesticks with our derivative oscillator, we have an unbeatable match. It is just unparalleled, I have found, in helping us track the markets, find trends, and follow them. We look at what has happened. It is a huge down move. We see after the first day of the 5-day candle, a strong crossing over going down. Now remember, we never call a candle until that candle is complete. We always talk about the 5-day candle all 5 days of the week, but we never call a crossover going down until it has occurred. But again, looks like unless there's a huge move up in the market, this is going to be a weekly vertical crossover going up. What are our rules for a weekly vertical crossover going up, going down? What are our rules? We wait until the candle closes, and then the next opening bell, that is the following Monday, we look to see how the market looks after that opening bell at the 1 hour mark at 10:30. Then we see if there is a jumping in point. So what we see happening right now is the makings of a weekly vertical crossover going down, a strong down move the first day of the week. Of course, there can be some recovery in that. Maybe so, maybe not. In fact, we look at our 2-day chart, we see a lot of down movement with some recovery in that with a long wick on the bottom. This, of course, is, we had the last 2-day candle end on Thursday, and this is the drawing of the current 2-day candle that ended on Monday. That encompasses both Friday and Monday. So we see, again, a strong down movement in the derivative oscillator and in the price percent oscillator on the 2-day chart. And as we go to the 4-hour chart, what do you think we're going to see? Strong down movement in the morning and even stronger down movement in the afternoon, blasting through. And again, remember, we had the weekly trend line penetrated on Friday afternoon, as we told you. And what have we seen happen? Even further and stronger down movements. We ended with the market being down to $264.11. Again, our Heiken Ashi candlestick is measured differently, and that's usually what we give you. But for the confusion on the part of some new folks, we'll try to give you both from now on. And again, just remember, Heiken Ashi is calculated differently, but it helps us understand where the average pace of the down or up or sideways slide is when we use those numbers. So we see a market in a decidedly down move. 4-hour chart, remember, rotated over all the way back on the afternoon of Monday, the 29th of January, and then sort of slid sideways and then started its real down move, as we told you, in the morning on Friday, and then on the afternoon on Friday, and then, of course, decidedly so on Monday, this Monday. So again, strong down movement. We'll continue to monitor and see. When we can find a jumping in point, we will sure tell you about them, and we will be doing all sorts of analysis throughout the course of this week. Now, the S&P 500 down 4.12%, the biggest down move we have seen in months and months and months. What do we see on the Qs? Almost down as much, 3.94%. That's the NASDAQ 100. We see it also crossing over, going down, not as strong. Derivative oscillator also flipped over. Well, the derivative oscillator is the one we see going down. The price percent oscillator is also flipped over and headed down. So we'll continue to watch all of this movement and help you keep it calculated. We saw the market actually close on the Qs at 158.12. And again, we have a candle, a large red down candle with a wick about maybe half the length. So again, you see a little bit of the battle between the bulls and the bears. And as we go from the weekly to the 2-day, we see the latest 2-day, again, red down candle penetrating strongly the weekly trend line. Price percent oscillator down strongly, derivative oscillator down also strongly. And as we go into the 4-hour chart, we see that the 4-hour chart had penetrated the weekly there at the end of the day on Friday. And what we see happening is another penetration on Monday morning, and then further down movement on Monday afternoon. Everything cranking down, price percent oscillator cranking down, derivative oscillator moving down strongly. So again, we see lots of strong down movement. Now, you might say, should I just jump in at any time and ride this down movement? Well, that's sort of like, should I catch a falling knife? You are likely to get cut. Could it work for you? Yes, it could. Will it work for you? That's a tough call. That's why we use our weekly vertical crossover going down. That's why we use our standard play when we already have a move underway and we wait for a pullback and then a jumping in. There are any number of ways to enter a market, but just jumping in at any time can be fraught with peril. Now, let's move on back to our weekly chart. And we go to TLT, which is the 20-year bond. It was up for the day 0.94%, but we see from our Heikin Ashi, our average pace candlestick, it shows continued strong down movement. And we see in the price percent oscillator, strong down movement, derivative oscillator, strong down movement, even though it was up almost 1%. And you might say, why is that? It's the way the Heikin Ashi is calculated. And again, it is to show us average pace. Now we look at the 2-day. How does that factor in? Well, again, we see from Friday and Monday, we see the way things shape up on our 2-day candle. Price movement still well below the 2-day trend line and well below the weekly trend line, in line with our weekly vertical crossover going down on the 2-day chart on the weekly chart back on the 5th of January is when our weekly vertical crossover crossed over going down. So again, continued strong down movement as we go to the 4-hour chart. What do we see? Well, we can see down movement in the morning and then that up movement in the afternoon with a long wick on top, gosh, about 4 times the size of the candle, and a wick about 1.5, maybe 2 times the size of the candle on the bottom. But again, we're seeing as far as the average pace goes, we can tell the struggle. And again, it was up to 120.71 as far as the actual close on TLT. And again, price movement still well below the weekly and well below the 2-day. We do see at the end of the day a ticking up of the price percent oscillator, derivative oscillator lost some downward momentum. So keep your eye. If you're still in that trade on TLT down, just continue to keep your eye on things. If we see it tick on down tomorrow. Now remember, this is the way things are supposed to move. When stocks are down, bonds and gold are supposed to be up. That is what we see for the day as we leave the 20-year bond and we go back to the weekly and we go to gold up 0.25% for the day. although our Heikin Ashi candlesticks show us that the average pace is actually sliding sideways and a bit off. We see what amounts as far as the first day of the weekly candle, this latest weekly candle, we see a doji, which means lots of indecision in gold. Price percent oscillator still heading up, derivative oscillator losing some of its upward momentum, but again, we'll continue to watch gold. We also see that as far as the prior weekly trend line goes, it had been breached at the close of the prior week, and it's further breached with the first day of the latest 2-day candle. So again, keep your eye on gold. There are some concerns there if you are still in that up trade on gold back from the 5th of January. What do we see on the 2-day chart? Well, we can tell it's decidedly down as far as gold goes. The 2-day chart actually peaked on our Heikin Ashi candlesticks at 129.52 back on the 26th, the 2-day candle ending on Friday the 26th. And what we see happening as far as the candle over these last 2 days is actually moving below the 2-day trend line and closing below the weekly, with the price percent oscillator heading down and the derivative oscillator going into the negative. And as we drill a little bit deeper and look at the 4-hour chart, we can see gold leveling off and then moving up some in the afternoon. But remember, gold has been heading down on that 4-hour chart since it crossed over going down back on the 29th. So we'll continue to watch. Perhaps we'll have a change in gold and a crossover going up. Derivative oscillators not heading down at the same pace that it was, but the price percent oscillator is, and that is our master oscillator. So again, lots of indecision as gold is sliding sideways at this point. We'll continue to watch and monitor. If you were in gold, of course, it's slipping below the weekly trend line as far as price goes, and of course already past the 2-day trend line. That is, of course, concern, and with this 4-hour chart looking as poorly as it is, even though it's an up day, it is a problem. Folks, that's where we are as we end the day in this exciting day of the market with huge down moves in the Qs, the NASDAQ 100, and the S&P 500. We'll continue to monitor things. Remember, keep it simple, obey our rules, and things will work for you. That's where we are as we end the day. God bless. Take care from the whole team here at Charting Wealth World Headquarters.